sponsored by the Securities and Exchange Commission of Nigeria.
Hello and welcome to Eye on Nigeria's capital markets. I'm Wale Famrewa. Now, the Africa Development Bank estimates that $350 billion is required over the next decade to address the massive infrastructure deficit in Nigeria. Now, this is far more than the government can muster to build roads, repair railways, and other infrastructures needed to galvanize economic growth and development. And today, we focus on the role of the capital markets in building the much-needed infrastructure in Nigeria. The provision of infrastructure to drive economic growth is one of the toughest challenges for governments and businesses across the world. Management consulting firm McKinsey has forecast a global infrastructure investment shortfall of $57 trillion over the next 15 years. That's 60% more than the $36 trillion spent over the previous 18 years and more than the estimated value of current global infrastructure. Nigeria has witnessed relatively strong economic growth, with annual GDP growth averaging over 7% over the last decade. Infrastructure, however, has failed to follow suit.
For years, Nigeria has underinvested in infrastructure. If we compare Nigeria with other BRIC countries, for instance, China is investing about 12% of GDP in infrastructure. India is investing about 7% of GDP. And if you want to grow double digits, you need those levels of investment. Nigeria is currently investing about 3 to 3.5% of GDP in infrastructure. And we often find that even when the capital budgets are approved, the actual implementation is not 100%. There's heavy use of roads in Nigeria, particularly for transporting goods, and in most countries that's done by rail. There's been years of underinvestment in the rail sector. Thankfully, the government is beginning to realize that there needs to be an integrated transport policy. The airports is also seeing significant amounts of investment, and we need to mobilize all different modes of transport in order to be effective. Otherwise, the roads will get choked up.
The Nigerian government is embarking on an ambitious attempt to address the country's infrastructure challenges through the National Integrated Infrastructure Master Plan, a program designed to mobilize $2.9 trillion for infrastructure projects over the next 3 decades.
What you have is political officers who have just 4 years, and there's not much you can do in 4 years. So you have a sustainable plan, and then they are introducing a bill, a law, that would disallow any government that comes in, reversing that plan. And that's how you develop a country.
It's a good thing the government is thinking. From what I heard, this is an infrastructure master plan that is focused over 30 years. As a consequence, that somebody is sitting down and looking through how you're going to join up things to deliver assets for the next generation, so to speak, I think that's a very, very good thing. Infrastructure by its very nature is a long-tail business, and so therefore it requires that kind of thinking.
What the Integrated Master Plan hopes to achieve is to get better coordination at different tiers of government. First, the national levels, state levels to local government, so that you can have a coherent view of where infrastructure development needs to happen in order to speed up economic growth. And what that means also is that when the private sector approaches you, you can lay out plans that you have. And it shows that you've done some homework, you can identify opportunities, because the private sector will also have their own interests, so you don't necessarily want to do every project the private sector brings. But if it's within the overall master plan, it helps in directing government policy.
In terms of concreteness, the plan is ready in draft. It's going through a process of validation and sensitization. We've done that on a zonal level across the whole country. We'll take it to the Economic Management Implementation Team. We'll take it to the meeting of the governors with the Vice President, which is the National Economic Council. And then it will go to the Federal Executive Council for final approval. We need to be assured by the fact that as a country, we are changing. We are becoming much more stable. In terms of broad economic policy, for example, there has been great stability from 1999 to date. Since the period of President Obasanjo to date, there hasn't been any significant deviation from the direction in which we are all heading. But additionally, what we are doing is also supporting it with legislation. And we're working with the National Assembly to address a number of amendments to existing laws, as well as probably a new law, a new piece of legislation that captures this plan that we are having and makes sure that it is continued from one administration to another. Integration. There is a lot of duplication now a lot of silo mentality. Ministries, agencies, states doing things in silos. The integration of effect will lead to considerable amount of savings in terms of resources, in terms of time, in terms of cost overrun of projects. That, in fact, we have an estimate in that in the plan.
It sounded a bit top-down at the moment, federal government looking down. It's very, very important that whilst there is a top-down view of the world, it's joined up from the bottom up, because the infrastructure need is not just at the federal level, it's also at the states level, it's also at the local government level. And so all the relevant stakeholder groups need to be involved in that process as well.
The master plan takes into account lessons learned from other countries.
Internationally, every country is also moving in this direction. Even the UK, that people seem to think that has well-developed infrastructure. 2 years ago, they started a process of developing an integrated infrastructure master plan. China has done this, Malaysia, Indonesia, and we've seen the benefit of these countries that have done this.
You have the 4-lane road in Abuja now between the city center and the airports, and everyone is excited by it. In most parts of the world, that particular road will extend all the way to the southwest, it will extend to the north, and then you connect the entire country. You can only do that when you have a master integrated national plan like the type we're talking about, and you reform the way you budget for projects.
Like many other emerging market economies, but also to some degree some of the developed market economies, Nigeria has a significant infrastructure backlog. And I think that's, on a political level, is well recognized, whether it's transport infrastructure, whether it's electricity and power, housing, schools, hospitals. There's a tremendous backlog of investment that needs to be done in that space. And again, not dissimilar to many of the other countries we look at. And the question in today's world is, if we launch a big spending program to upgrade our infrastructure, modernize, build, where's the money going to come from? South Africa, for instance, is going through a similar program. When you look at energy investment on the ESCOM side, Transnet is heavily investing in railroads, highways and national roads have seen a lot of investment. So everywhere you go, this is really what's driving the economies at the moment, because ultimately a proper, modern, functioning infrastructure is going to be behind a growing economy, is going to be behind a competitive economy, and ultimately also will increase incomes and help alleviate poverty in these countries.
However, planning is just the first hurdle. Given government budgetary constraints, raising the capital to build infrastructure will prove to be a considerably more difficult task, and the state is turning to capital markets to provide the type of long-term finance required for these projects. Recognizing this role, Nigeria's Securities and Exchange Commission organized the Infrastructure Roundtable, a workshop to explore how the capital market can finance the development of infrastructure in Nigeria.
From the perspective of SEC, we have a dual mandate. We're a regulator, but one of our other mandates is market development. But more importantly, infrastructure is the lifeblood of any economy. Yet, we have such huge infrastructure deficits in Nigeria. The African Development Bank on Monday, last Monday on the 29th of July, launched their Infrastructure Action Plan, where they estimate that on 2010 constant prices, that from 2011 to 2020, that Nigeria needs $350 billion for infrastructure, $35 billion per year. There is no way that all of this can be funded through the federal budget and the state government budgets. So for us, we believe at SEC that the capital markets is the answer, because in addition to ordinary budget financing, capital markets offer a variety of products that are particularly essential.
Some participants at the roundtable shared their experiences investing in infrastructure in Nigeria.
We're currently involved with a power project. It's about a $350 million power project that we will look to take quite a good bit on our balance sheet, and the rest we'll syndicate it into the market. As I said, we're also involved in a port project in Lagos. It's a big port project around about $400 million, and we're looking to take quite a bit on as well. So the deal sizes are quite big. We're also recently involved in a toll road project, which we're quite excited about. Very early days, but we think it's going to come to financial close sometime.
So at ARM, we're in the process of establishing the ARM Harith Infrastructure Fund, which is conceived as a $250 million closed-end private equity fund. That's going to focus on a number of key sectors, including transport, including power, energy, and also utilities with things like oil and gas and telecoms. We're en route to first close for that fund, and we're already in the process of investing in various other assets besides Lekki Toll Road that we were involved in much earlier on.
Over the last decade, the implementation of an infrastructure development program has been met by many challenges. Past attempts to attract investments have been blindsided by inefficiencies and weak processes, leading to contract cancellations and significant losses for a few investors.
If you wanted to build a major airport, that may consume the entirety of the budget for the whole year, because you're only entitled to budget a certain amount for the year because of the revenue that you make, and it's a year cycle, it's a 1 year cycle, and therefore everything you need to do it within that 1 year, and it is based on the revenue that is generated in that year. So you will understand why the civilian governments have great difficulty in funding major infrastructure, whereas the military government are the main people who funded the main infrastructure in Nigeria. We've tried concessions, PPP, but what has happened is that it's not gone through a transparent process. So either a governor or a president simply concessions a road to a friend, whether or not he has the capacity, whether or not he has the ability to raise the necessary finance, and whether or not there are any maintenance mechanism introduced into that project. So what you do normally is you connect the capital market to this infrastructure, and basically because you're using other people's funds, there's a level of transparency that's introduced into the system.
Nigeria's authorities are being asked to fix these weaknesses before kicking off the National Infrastructure Plan.
So if you concession a road to a friend, there is no standard. You simply just concessioned that road. But if there is a process and there is a bidding process, then you get the best contractor to actually construct that road, and you set standard, and then there's a guarantee that if it is not up to that standard, he pays back some money. There are penalties that follow. So basically, it is the process, the bidding process. The entire chain from conception to implementation must be transparent, and the regulators must obviously be competent and understand what is being sought to be achieved. And that standard, if it's not achieved, whoever is given the project will be made to pay for it.
After the break, we explore potential capital market sources for financing infrastructure and what attracts investors to this lucrative but risky asset class. We find out right after this.